Please welcome.
All right, the realestateexperts.com online, Brian and Mackenzie Crabtree and our team. If you're looking to buy or sell anywhere in Metro Atlanta, go to our website and we'll help you with whatever it is. You know, when you pick up my business card and meet me for the first time, a lot of people take note that my title is problem solver. I don't like CEO, founder, VP, broker, realtor, real estate agent. I don't like to go with those labels because that says average and mundane. What I like to say is that my job is to solve problems. Even if you own your house free and clear, you bought it for $100,000, it's now worth $2 million, and you want to sell it. Your problem is you need to find a buyer willing to pay you as much money as possible, and the market is in conflict with that. My job is to solve that problem and help you get the most money, least amount of hassles, in the least amount of time. That's a problem solved. If you're facing foreclosure, the courthouse sale is next week. We just had one like that and we stopped it. Doesn't mean that we're going to have success, but we helped put our heads together with appropriate people in the process and convince the bank to pull the file from the sale and allow us to try to conduct a short sale. We'll see if the outcome is as successful. Problems solved in real estate starts at therealestateexperts.com, or if you just want to know your home's value, thinking about selling it, househuntingonline.com. You can also check out our service providers there for all aspects of the financial process. Heath Beam of Singular, Financial Singular, privatewealth.com, Liz Stewart at Stewart & Johnston, title and closings here in Georgia, and of course our buddy at ourplanrocks.com, New Era Health Plans, the other mortgage in your life, solving your financial problems. Ourplanrocks.com, or just find them all on our partners pages at therealestateexperts.com. So I have an email I want to read from a listener from last weekend's show. We spent a lot of time on the show last weekend talking about the economy, the outlook of the housing market, the economic outlook for our country, what it's going to look like in a year, 2 years, 3 years, 5 years, 10 years, and how to really adjust your housing investments or ownership to reflect that so that you can make the most money. I don't believe in trying to time in and out of investments in housing or any investment like you're surfing on a wave and you want to jump off the board before you crash into the sand. That's a good way to face plant financially yourself into the sand and the beach and the seashells. This is financial investment is not about timing waves like you would on a surfboard, timing when you stand up, timing when you get off before you plant your face in the sand. It's about figuring out how to ride the wave without falling off the surfboard. And finding the right time, you have to predict not when the market's going to crash, not when the wave's going to crest, not all that stuff. You have to kind of just figure out how to ride for the longest time. Sometimes it's sitting there and waiting when good waves are passing you by for a bigger wave that'll give you a longer ride so that you can ride out the wave to retirement and have your assets perform at best for you. Most people try to time them based upon what's happening in the market. They freak out, they sell when they should be buying, and they buy when they should be selling, and we've all done it. I spent the first part of my life doing a lot of that, and jokingly, there's many people who would admit humbly now that they've always been great at buying when the market needs sellers and selling when the market needs buyers, which is the exact opposite of what you're supposed to do. That means I typically, early in investing, you typically buy high and sell low, which means you lose a lot of money. If you start thinking smartly over the years, you start learning to buy low and sell high, or better yet, buy when the market needs buyers, which is when most people are afraid to buy, you buy because prices are down, or you sell when the market needs sellers, which would be the market we've seen over the last year and perhaps for a thin few months into the future. So John writes me, my wife and I really enjoy listening to your show, Brian, especially when you dive into political aspects of the economy. I listened today, this was Saturday the 15th, and came away feeling like you didn't quite close the circle. I kind of agree with him. I almost felt that way when I got off the air. I could have gone further. So he said you teed it up indicating economic balloon is reaching capacity, longest expansion, real estate cycle nearing peak, overbuilding, lack of competent resources, but you never came back and answered the questions. And here are the questions that he puts before he says, will you tackle this on another broadcast? Well, John, this is the broadcast, and he asked me two questions and then one personal question. And I think I'm going to read two because I think answering this question will be helpful. But let's go first with what will be the first signs of a corrective reversal recession? Well, right now. And maybe I didn't do a good job of this last weekend saying right now are the signs. There are fewer showings than there were this time last year. The inventory is flat or up. It is not declining as it was this time last year. Appreciation has decelerated significantly, even as of July, when it should have been improving. Inventory in certain parts of the market is increasing. Prices are declining. And let me give you some examples of that. So the way you judge a real estate market is twofold. First of all, there's what drives the market. Well, it's always not location. That's sort of a generic phrase to describe if you're in the right location, Buckhead, and it's in high demand and there's only limited supply of land, then obviously the location creates a propensity for prices over time to rise more rapidly than they might say in Cumming, Georgia, which is on the fringe or sort of the fringe of the metro Atlanta market where there's lots of land that can still be developed. So there's no shortage of development land in Cumming, Georgia right now. And Cumming's a great area, so I'm using it because I like Cumming a lot and I like Buckhead a lot. But the difference between Buckhead and Cumming is you can watch Buckhead for signs of fracture in the economy or the housing market, and you can really get hit by the tidal wave. The reason for this phenomenon is that most people who have the money to invest live somewhere like an Alpharetta, Roswell, or Buckhead, usually, not always. And so they invest in their own backyard. That is absolutely the last thing I would want to do. I don't have any investments in Buckhead or anywhere close to Buckhead. It's too damn expensive. I love living there. I think a lot of the area, I think it's one of the most wonderful urban areas in the country, in my opinion, Buckhead. But I don't want to invest in Buckhead. The condo we live in is not an investment, it's a liability. It's a place to live that could go up in value and could save us some of the money of just renting, right? But it's not an investment. It's a cost. Every month, I have no revenue on it. So I go to places where there seems to be turmoil, and in my case, it was some of the South Fulton County areas when the market really was still in the tank, and it's really improving right now. You look at those areas, they were lagging behind the rest of the housing economy. When Buckhead was almost fully recovered, it was still kind of in the dumps in South Fulton County. And so right now, there's no indication in South Fulton County that there's any problems because jobs are really great right now. Whether you want to give Obama credit for whatever you think he did or Trump for being president or both, it doesn't matter. The economy is phenomenal on paper. And jobs are the leading indicator of what's going to happen in an overall housing market. But when you are starting to see fracturing in the market, you have to look at what I call the fringes of the market. The best way I can describe this is I've always had property in what I would call the fringes and in the middle of the market, like the Buckhead and the Cumming. I don't have anything in Cumming, but Cumming is an area that I also work in a lot. I have a lot of listeners that live there, so they call us to sell their homes. And what I have found is that in Cumming, Georgia, we are starting to see a lot of price reductions. The number of showings are declining. And the prices that things are selling for are no longer exceeding that for which they sold for 3 and 6 months ago, which had been the case for the last several years. Places like Lake Lanier, where there are second homes more so than first homes. I'm following a lot of homes at Lake Lanier. And those homes are having frequent price reductions. There are things selling. The market's not bad. Prices are up compared to where they were. But the bottom line is that prices are showing signs of strain. Is it a glass ceiling? Potentially. It could be. I mean, if we have some additional economic boom and the stock market continues to press forward, then certainly what I am saying could be, at least for a short period of time, paused and untrue. But I am seeing the signs that we are becoming exhausted with this recovery. It is the second longest, almost the first longest economic recovery in U.S. history in terms of growth. And if you really talk to people in the business like me, or talk to people in the stock business that work behind the scenes at Goldman Sachs and don't necessarily interface with customers, the analysts, the people that really predicted the last crash, they're saying it's over. Now, what does that mean? Does it mean that we're going to have some major crash of the likes of the last one or worse? Some people are saying that. I don't buy that. I don't see the signs in terms of jobs and the economy and deregulation, all of which was what created. It was regulation combined with a financial freezing of the markets and really people with bad credit having too high a loans, over leveraged, over debt, bad debt that was rated incorrectly. I don't see that problem right now. There may be a different problem we don't see, But I don't think it equates the kind of fracturing that occurs when the mortgage, the biggest financial lending instrument in America for the average person, is overwhelmingly going into default. There were people losing their homes, not just home, but homes that were still paying their car loans and credit cards just fine, student loans as well, because the home became worse than a credit card. Now you have something that you can't use. It's not renting well. There's nobody to rent it. The jobs market is bad. And you had all this speculation that turned out to be not the American dream, but the American nightmare. We don't have that now. So I don't predict the kind of crash or bubble pop that we had last time. Is it possible? Yes, but below 20% odds. I think we're looking at a 10 to 15% correction in housing prices in certain parts of markets like Atlanta or the country. I don't think Atlanta Metro will see that kind of depreciation. If I had to put my number on it or my prediction of percentage, it'd probably be about 8 or 9% depreciation in the market. So, but places like Cumming are starting to see fracturing. Places in the north part of Fulton County that are further out than just Alpharetta proper, but maybe Milton or beyond. Places like Coweta County, Heard County, Fayette County, things that are on the fringes of the metro Atlanta market, where a bunch of builders have rushed in to buy the land. And at one point, there was all of this consumption. And not only has consumption gone down in those areas, the amount of inventory has gone up. So there's a shadow inventory created by speculative building by builders again. Nowhere near what it was last time. So you got a lot of builders going, well, so-and-so said something about me, and I've got a guy right now, so-and-so said something about me in the public, and it's cost me all this business. Well, I told the truth, but that's not what cost you the business. What cost you the business is the fact that you're doing spec houses, and there are not as many buyers buying spec houses right now outside of 285. There just aren't that many inside of 285, or that'd still be the problem. So the moral of the story on the first question, what are the first signs? You start to see the areas where there's a lot of land opportunity and development get weaker, and it's happening right now. The next one is, what should people do in response? What do you do if you own a house or houses or investments? That will be next. Don't go away.